Supply and demand is undoubtedly one of the most easiest and most archaic trading strategy ever, because like basically the whole economics is supply and demand, and that is one thing that actually makes this strategy one of the best strategy out there when it comes to giving decent win ratio. However, when it comes to trading supply and demand, there are some secret things that you personally need to implement whenever you are trading it. That's why if you are watching this video right now, I believe you are trading supply and demand, but then you are not getting the desired result, probably from the channel you learned it from or from me. Well, the basic truth is that what there are some things that actually fosters the sources of supply and demand that you might not be aware of here. That's why in this video I'm going to share with you these 5 secret tips that you need to put in mind whenever you're trading supply and demand to make sure that what you are only taking the right trade. So let's get straight into today's video. So hello guys, when it comes to trading supply and demand, as I already said, there's 5 very important secret rules that you need to keep in mind, and in this video I'm going to share all those with you. Now before we even get started, let me show you a trade that I actually had today. You can see it here. Here is the same supply and demand strategy that is implemented here on UK 100. A solid 1:4.3, and then this same strategy also implemented right here on GBP USD. You can see it's currently running, let me take a look at it, currently running 1.3 already, yet see some space to go. So now this is exactly the same strategy I'm coming to share with you in this video. This is something I personally use to trade as well. So now the rule number 1 when it comes to trading this high quality supply and demand is simply focus on only high quality zones. Now what are high quality zones? High quality zones are zones that has particular characters that you need to watch out for, which tells if the zone is actually good or not. Now here is it. Then first you need to look at when identifying the supply and demand, simply make sure that the zone is only of high quality. Now what makes a high quality zone? Here are the rules. 1, look for zones with sharp price movement away from the area. Now what this simply means is that what your zone should have a major movement from it and not some sluggish zones. So for example, let me show you what that actually means. Take a look at this zone here on US 100. Just take a look at the zone here. You see how the market moved away from it sharply. Now this is what we refer to as only identified zones of sharp movement. This sort of zones tells you that what there is a decisive movement away from them, meaning that whenever the market comes there, there's still a high chance of the market rejecting from it. Now here's a typical example of it here. Take a look. When immediately the market mitigated the level here, you can see that it bounced off immediately. Why did it bounce off immediately? Because this area here is a very key level that institutions, the banks, the big guys are always interested in selling from. Why? Because they've seen that there's a major movement from it, which means it's likely to recreate itself again. Now that is the second one here, simply fresh zones, those that haven't been tested before. Now when it comes to identifying high quality supply and demand zones, you need to make sure that what these zones haven't been tested before. Now why shouldn't it be tested before? Supply and demand zones are to be used only once. The reason why they are to be used only once is because once a zone is being used more than once, it turns from supply or demand into a support or resistance level. So when you identify a supply or demand level, just make sure that what that zone hasn't been tested before. So for example, let me show you what this means as well. Now here is it. Here is a candle that created a zone, and then the bullish candle here, which is the blue candle here, is the one that created the level, followed by these 2 bearish ones that bounce off it immediately. Now in this scenario here, after this blue candle created a level, if any other blue candle within this area taps this same zone again before, it means that what the level is invalid and it doesn't worth trading. So to make these zones valid, you need to make sure that what they haven't been tested before. So for example, if you identify a supply level like this, once the market leaves here, you need to make sure that no any other bullish candle has tested a level on the particular time frame you are trading. Any other bullish candle shouldn't temper with that particular level. So you can see no other candle came in until the one that triggered the zone came in, and then I took my sell from there. Now next are zones found at key market levels. Round numbers, previous support and resistance level are more reliable. Yes, this is the most honest part of identifying supply and demand levels. The most strongest supply and demand levels are ones that are created around support or resistance levels or around round numbers. The reason is because those areas are decisive areas that everyone knows that what people are going to sell from, people are going to buy from. Every institution, every retail trader knows that this is a support level, is where we should be buying from. This is a resistance level, is where we should be buying from, which means that that area has a lot of liquidity to back it up and push the market downwards. So I don't know if this one was around that area, but now for this particular final point here in identifying high quality zones, it varies. But in most cases, it's more advisable to actually identify things within those levels, as they tend to give more accurate results. So for example, if I should mark here right now, you can see that it was once a key level. You can see market tested it before it broke out of it, and then tested it here, came back to test the level again. So this one was identified in an area of resistance. I didn't even know. I just saw it and then I identified the level itself. But it turns out that it was an area of resistance. You can see tested here multiple times. So the market came back to test it, respected, came back to retest it again, and then I got my sell sweeper. Basically that simple. Now this is the rule number one when it comes to trading supply and demand. Simply focus on only high quality zones, and I've given you every single thing you need to look out for in an high quality zone. Now, down to the rule number two, use time frames strategically. Now, what do I mean by you should be using time frames strategically? Now, when it comes to identifying supply and demand levels, the levels on higher time frames are more precise than the ones on a lower time frame. Now, nonetheless, at the end of the day, it all comes down to the strategy you are trading and the time frame you've backtested your strategy on. So personally for me, I trade more on the 30-minute time frame. So I always look out for the 4-hour time frame trend. Now the reason why you need to use time frame strategically is because you need to trade according to the higher time frame trend of the particular system you are trading. So for example, here I say identify zones on higher time frame for major trends. Now take a look at this particular market here. Even at the 30-minute, it's clear that it's a downtrend. But however, let's go down to the 4-hour time frame. So basically for me, I consider more of the 4-hour time frame when it comes to identifying my trend. Now the 4-hour time frame showed clearly that the market is actually a downtrend. So since the 4-hour showed me that it's a downtrend, then I'll go down to my 30-minute to go identify my supply and demand levels. So now basically, I like identifying my supply and demand levels on the 30-minute. This not because the 30-minute is the best to identify them. It simply means that that is what I have backtested over and over again and has proven to work. That's why I stick to it. So in your own case, it might be different. Maybe you are better off on the 1-hour time frame. You are better off on the 4-hour time frame. But the most important thing is that know the time frames you are trading and then make sure that you identify your levels on those time frames. So basically for me, I look at the 4-hour trend, and then I go to the 1-hour time frame to go identify supply and demand, and then I go over to the 30-minute time frame and then modify them to fit them and then make my stop loss positions smaller. Now this will help me get a decent risk to reward without having to stress myself. Like for example, in this trade, I initially started off with about, let me come over here and close and mark it out. I started off with, you can see my stop loss here, it's just 17 pips. You see, with as simple as 17 pips, this simply means that I can go on high lot size, knowing where that I'm maintaining my account's usual 1% risk approach. So now this is basically it for it. You can see this simple and straightforward. Number 3 is simply be patient and let the price come to you. Now this one, a lot of you identify good supply and demand levels, and then you can't wait for the market to actually come and mitigate the level itself before you take your trade. In that way, you end up taking trades that shouldn't be taken in the first place, and then you end up in loss, and you wonder why it doesn't work for you. Now the basic reason why it doesn't work for you is simply because you are not letting the price come to you, but you are going for the price. Now what you mean by letting price come to you, simply once you identify your level, stay back and let the market come to that particular level. That's why it says avoid chasing trade. Instead, wait for price to retest the zone before entering. Now let me go back to this trade again on GBP USD. Now take a look at it here. After identifying this level, take a look. Market came here, it was closed, but still did not get to the level. I did not take it. It came down a bit lower until the market came to mitigate this level. I'm not going to take the trade, and that's basically how it works. So if the market doesn't get to my level, I'm not taking the trade. If you like, let it reject and fall off from there. It's none of my business. I have a setup and I'm waiting for the setup to play out. So whenever I identify a level, wait for the market to come and mitigate it before you take the trade. If the level is not mitigated, there is no need taking the trade at all. Like if I should come down to this particular Euro NZ, okay, I don't have a trade here. Euro card, do I have a trade here? Okay, take a look at this particular trade now that I let go. I will not say I mix. I basically let go. Now you see this particular market here. Let me just refine the position clearly so you see it. Here is it. Take a look. Here was a supply level, and then look at how close the market came to it. But I didn't take it. Why didn't I take it? Because what, according to my trading rules, I need this market to actually mitigate this box. Let it touch this box before I take it. Since it didn't touch the box, there was no need for me to actually take the trade. And this is something you also need to learn as well as a trader who is trading supply and demand. Once you identify a level, you need to make sure that what, the market touches that particular level before you take the trade. If it comes close and doesn't touch it, still leave it. If you miss the opportunity, let it go, because the fear of FOMO is what will actually lead you into more trouble as a trader over any other thing. What I mean by FOMO is simply fear of missing out. If you are not afraid to miss out on any opportunity, then trust me, you will have the upper hand in actually making decent profit from the market. Now here's also another one that I should use as an example. Take a look. Here is my level right here. Look at how close the market came and then started selling off. Still, I'm not going to take it. I'm still going to hold on to this level until the market comes back to it. Now, you also know this as well. So this is very important for you. If you really want to become successful at trading, you need to learn the act of being patient and waiting for the market to come to you. Now, number 3, use confirmation entries such as candlestick patterns, e.g. pin bar, engulfing candles, or oscillators. RSI divergence. Patience often results in better risk to reward setups. Yeah, when it comes to taking your trade, you need to be very patient and then wait for your preferred pattern to pin out before you take your trade. So basically for me, when I identify a supply level, I wait for a candle to close outside the level. So it could be a pin bar, it could be an engulfing candlestick. Basically what I need is that I don't use indicators to identify when to go in. I use my normal candlestick patterns to wait for the market. Once the market comes to my level, it did not break the level, so I wait for a candle to close outside the level to the direction I want to trade. Then I take the trade. So now let me break down this for you as well. So for example, this is a trade I have to do. So that is basically what I'm going to use as an example for the whole video. So now basically here is it. After the level, you can see that what, market closed outside it. So you can see that immediately the market came in here. Here was it. Since it's a bullish candle, so you opened here and then closed here. You can see that I took the trade immediately. Immediately the candle closed, then I got into the market and then executed my trade and I held till close off at when I wanted. Now all these trades I'm taking here were actually taken on my Forex Capital that I'll be showing you soon. It's actually a prop firm where I'm trading a 25k account and I'll be showing you the whole trade soon. And a snapshot from all of this. For all of this trade that I'm sharing with you here as an example. So guys, the fourth point is simply combine your zones with other confluences. Now this is really important because when we talk about identifying supply and demand levels, you can identify over 700 to 800 supply and demand levels in the market, depending on the time frame you are. But the most important thing is using the ones that are really clear and concise. Now when it comes to identifying this one, you need to identify them at very key levels in the market that actually makes sense. Now for you to be able to do this, you have to mix it up with other things. Like for example, you shouldn't just trade supply and demand randomly. You can mix it up with trend lines. If you know about trading trend line, meaning you simply identify these levels around areas of trend line. Secondly, moving averages. If you are good at using moving averages, identify your levels around the clear moving average point. If you have a level around moving average at the exact point where moving average is, you will be good off with it as well. And if you are good at Fibonacci retracement, also use it to help modify your trade. Like use other things to help support the trade, not just identifying levels and taking the trade, but have other confluences that are used to support them. So basically for me, only thing I look out for is the trend. If the trend is downwards, I'm cool at looking for sales. If it's upward, I'm cool at looking for buys. And then I always look out for support and resistance level, and then other confluences that I personally use as well that I can share all in this video. So basically, I created a full video on this setup already. You can watch it to be tagged in this video description. Now apart from all those confluences, the next thing that you need to monitor your trade very carefully. When you have a trade running, you need to watch out for things like news, major event, and then other things that might influence price actions, because you might have the best setup and everything, all right, but not watching out for news, which is the key fundamental information that could easily change the market, to actually put you into more problem. Like yesterday I had a trade on US 30. I was already in deep profit of about $400, and I later came back to realize that the trade hit my SL. Then I checked my other phone. I realized that what Russia and Ukraine are back at it again, which affected whether the US 30 stock, and they fall about 30 something ton. I be what exactly? I didn't even bother reading it. Immediately I saw the headline, I just knew that, well, come on, this is it. And the gold was also skyrocketing at the same time. So yeah, So basically, when it comes to trading, you need to keep an eye on news as well and all of that, because they can easily change the market direction. And the truth is that what you cannot always watch out for news, but the best you can do is simply keep your eye on the website like Forest Factory and the rest to actually see you through. Now, before we get to the final step, for those of you who are wondering which firm I'm using, I'm basically using my funded capital. That's why I took all of this trade. I'm trading at 25k challenge account. That's why I took all of this trade that I'm sharing with you right here. And here are all the trade here. um Here is the GBP USD. I went on a 1:2 break even level where I got $201. Yeah, because once my trade moves into 1:2 plus, I simply set move my stop loss to 1:2 level. So once the market reversed to that point, it get me out. The same thing happened on UK 100 as well. You can see UK 100, I haven't had two positions, same thing happened. But at the end of the day, I'm so far up on the week at 1051 plus 1051, because I started the week with drawdown. Yeah, here was it. I started with a drawdown, but currently I'm up with 950. That is the most important thing. And then here I have all my trade analytics, my top performing pairs, and truly this pairs has really UK German 40 over 400 here, GBP USD, Euro NZD, UK 100, and then GBP card. And I love the way they are showing my top performing pairs. And the most important thing is the growth level, seeing that your account is actually up. Like, this is the most important part. So now basically this is simply all of it. Now talking about the final step, the final rule you need to keep in mind whenever you are trading, whenever you're trading supply and demand, simply just be consistent and then back up every single thing you are doing with real-time data. What I mean is that whenever you learn a strategy finish and then you've noted down all of this point that I've given to you, go back and then back test using all of this information that I've shared with you right now. I gave you 4. The final step is simply you sticking to the game itself. So basically there's nothing much to add to it. Just follow these 4 tips I just shared with you right now, and then you are basically good to go with trading. If you can implement all this with your supply and demand trading, then you are better off sticking to it, because come on, there's nothing much to add to supply and demand. It's a very simple strategy that just need a little bit of discipline and other things to actually help you get the best opportunities. So now with this already said, hope you find this video helpful. Don't forget to help me do the YouTube business by smashing that subscribe button, like this video as well. And secondly, if you are looking for a prop firm you want to trade with, so for the trade I took today, I took all of them on my funded capital. You can also give a try to them. I'm trading at 25k account, and you can also come and check it out on their website as well. So with this already said, hope you find this video helpful. Help me do the YouTube business. See you in my next video. Bye.